Hello, friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about Pokarna, an interesting play on the domestic, you can say, housing sector and the global housing sector. So let's understand about the company and let's understand whether you should invest in this stock or not. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about Pokarna, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel. It will help you also ask me questions in greater detail. The Patreon membership starts with $2 and it goes up to $10. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up on a daily basis. The podcast that I put up virtually every day or every next day on markets and on particular stocks, which are exclusively for Patreon members, in which I give short term and long term calls. And also, you can ask me questions every day. For detailed company or market talk, you can directly email me and we can work things out. Established in 1991, Pokarna provides quads for kitchen tops and specialty building materials for housing. So it provides kitchen top materials for making that you can say modular kitchen, etc. So it's in a very niche space. It has global exposure, exports to more than 30 countries globally, even more than that, and major you can say revenue comes from global players. So it has got hurt in the last 6 8 months because of the kind of situation that we are going through. It is in a niche segment and a leader in this niche segment. It is serving leading clients, say hotel industries, etc. So again, that is getting hurt. The market cap of the company is around 400 crores or so. If you look at the numbers, so this is financials and Q1 FY21 versus Q1 FY20. The sales dropped by around 80%, understandably, in the June quarter because of the shutdown of economy globally as well as here in India for around 45 to 2 months, 45 days to 2 months. That means 45 to 60 days. The profit of 30 crores last year became a loss of 9 crores this year. So a severe impact of the pandemic has been seen in these companies. It is virtually debt-free, decent promoter and institutional holding with 25% free float with the retail investors. Return on equity at 23% and net profit margin of 29% has stood for many quarters, and this has been the stellar feature of this small cap company, but has been under pressure for the last 2 3 years because of a number of reasons, because of the kind of situation that globally with the GDP growth, with the economy that has been happening, so that has hurt the business altogether. If you look at the performance, so did really well till April 2017, and from 2014 March till 2017 April, for 3 years, this was one of the best stocks in the small cap division and going up very well. Even for traders, this was very attractive. But then the fall began, and over the last 3.5 years, the stock has relentlessly fallen, have lost 65% from that peak, fell nearly 60% in the February and March fall. So really, it did not get spared even in that carnage of February and March. Have recovered smartly from the March lows. So yes, it has gone up 50 60% from those lows, but still way beyond. It is still down big time from those 2017 highs. Numbers have been weak consistently. So yes, the recovery in the stock has come in, as has in all, you can say, small and mid cap stocks, but the numbers have not come in here. So that is what we should be wary of with respect to Pokarna. So, what has been the reasons for the stock crash? Bad numbers on a consistent basis. So, it is not about the pandemic and not that over the last 2 3 quarters the numbers are not coming in. If we consider that this pandemic started in the globally in January, came to India probably in March and early April in big time. but it is not that the fourth quarter of last year and the first quarter of this year has been bad. It is over the last 3.5 years we have seen numbers declining. So it is because of their operational inefficiency, and to an extent because of the external environment of what is happening globally with respect to political unrest in many countries, as well as the economic situation, that economy is declining globally, that has hurt their business completely. Raw material cost has also increased. So yes, oil may be at $40 currently, $42 per barrel, but at $16, $18 per barrel in 2016, everything was looking hunky dory for the company, and it has gone up 2.5 times from those levels. So that has also hurt because the numbers are back ended. Numbers came in FY16, FY15, which were very good, and it is very hard to match those numbers, and investors look at you can say sequential or year on year growth, and which is not coming in. Current lockdown has further complicated the problems. The shutdown in the economy, etc., has further complicated the problem. Demand has been abysmally poor, not only here in India but globally. So all these things have meant that the company has gone through, you can say, a period of bear market in its own business altogether. And I think next 2 quarters doesn't seem good, and that's why people are not flocking in to buy the stock, and the stock is not running up, even though other companies in many sectors have recovered, but Pokarna has not, because the next 2 quarters also look difficult for such a business. If you look at the technicals, then 120 is a good short-term support. If that goes, we are looking at around 95 to 100 levels. Probably if somebody has it, keep a stop loss at around 110 to 120 between that, and do not go beyond that, because the fall could be severe if the market reverses. These weak stocks get taken down very quickly. So you need to consider that the 200 DMA is around 110, very weak on charts, and I believe that the only way the charts could become better is that when it goes above 153, and that can happen only when the number starts kicking in. So probably we are looking at FY22 as the time frame when the numbers would start kicking in, probably June 2021. So still there are about 6-8 months to go. Probably if somebody is looking for 4 5 years time frame, can start accumulating over the next 8 months. That would be a prudent strategy. If you're really looking for a risky trade, you can do that, but do not expect in the next 1 year to make a big amount of money in this stock. So what needs to be done, in my opinion, avoid for the time being. If you're holding it, kindly hold on, because it has already fallen a lot. Keep track of numbers. If you are holding it, have a 2.5 year time frame. You will make money in this stock, but over the next 6 months, things could be difficult. We could see below 100 levels on the stock. So this was a video on Pokarna. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. And kindly subscribe to the Patreon channel. Thanks a lot for watching.